Hi, and welcome to ABG's Investor Days. In total, 59 companies will present over 2 days, which is a record number of companies participating. Each company presentation will be followed by Q&A from the analyst, and this event is live streamed but can also be watched afterwards on Introduce. My name is Anna Danfors, and I'm a retail equity analyst here at ABG. With me today, I have Fiskars Group's Christian Tamla, who is Director of Investor Relations. So please go ahead, Christian, with your presentation.
Thank you, Anna. Let's get started. If you switch the slide, please. First of all, Fiskars Group is a global lifestyle company. We are present with our own operations in 30 countries, and our products are sold in more than 100 countries globally. Our most important markets are Northern and Central Europe, of course, North America, Japan, Australia, and China. So those are really the key markets for us. And actually, the most single largest market for us is the US. So that constitutes of close to 40% of our net sales. And I actually argue that there aren't that many big Nordic consumer goods companies with such a huge share of business in the US. So that's a really important market for us. We are based in Finland, but Finland is less than 9% of our net sales. So it's still an important market, but it's not that big. We have a unique portfolio of much loved brands. And if we actually switch slides, then we can see, and here we have them. So Fiskars is the most important brand for us, and but there are a lot of other brands that are familiar to, I'd argue, most of you here on the line. So in the Nordics, we have a lot of local brands that are their heritage in the Nordics that we have now brought forward to other markets as well and expanded. Why do we have these kind of many brands? One key reason is that if we take, for example, the tableware category, then actually, if we look at different countries globally, the consumers' tastes and preferences vary a lot. So just as an example, the kind of style that Iittala has is really kind of simple and clear-lined and sleek. That's really sought after, especially in the Nordics and Japan. But then, for example, that's not a brand that has a really high demand in, for example, China. So the Chinese preferences vary a lot and are very different, and therefore we have a big portfolio that we can cater different kinds of needs and preferences all over the world. And our brand portfolio and brands, that's what the consumer sees, but that's not the way that we drive our business. So if we go to the next slide and go a bit more into detail on that. So we drive our business through 3 different business areas, and these are all P&L responsibilities that they have. So they are really responsible for all the decisions that they have within their mandate. The kind of the different BAs are categorized by category. So Vita provides products for tableware, drinkware, and interior categories, and then they can choose which brands they use to do that and what kind of product offering they have. Iittala, Copenhagen, Waterford, Wedgwood, and now Moomin as a new one are the most important brands here, and I'll get back to Moomin a bit later. Terra takes care of gardening, outdoor, and watering categories, and then Crea has this scissors and creating and cooking. So that includes our really famous classic scissors that have been sold over 1 billion pairs since they were created back in the days. If we look at the BA by size, you can see that Vita and Terra are roughly equal size in terms of net sales, whereas Crea is much smaller. But then if we look at EBITDA, which is the measure for profitability that we use, you can actually see that Crea is by far the most profitable business that we have. So this is the way that we look at the business when we talk about it. We had a Capital Markets Day approximately 1 month ago, and in that event, we launched a new strategy. And if we go to the next slide, I'll discuss a bit more about that. So the logic in our strategy is to focus on winning brands, channels, and countries. So it's all about focusing on where we are strong already and where we can improve even more. Within these, there are 4 important parts that are especially biggest ones driving our change in the next 4 years period. Commercial excellence, it's a lot about what kind of pricing, what products do we have in which categories, who do we work with, how is our brands visible to the consumers, and all these really basic things that we see that we have a lot of improvement potential going forward. Direct to consumer is nothing new as such. We have a lot of own stores. We have roughly 360 own stores, most of them in Asia. We have, for a lot of brands, we have our own e-commerce sites, but there's still a lot that we can improve in this field going forward. And then with regards to markets, US, as I said, is the biggest market already for us, but there's a lot that we can do to improve and grow there. For example, we don't have all products that we have in Europe, we don't sell currently in the US. So that's one example of what we can do going forward. And then China as a second really important lever for the growth story going forward. But then I'll just give you a few examples on where we see growth potentials. If we first go to talk about brands, go to the next slide, please. So Fiskars is our #1 brand. It's a global brand with it's a strong recognition. Its performance has been really strong. So it's about 40% of our net sales. And it has grown now for the last 4 years about 7% annually. And that's much more than the group average has done. We still see a lot of potential. So as I said, not the full portfolio isn't sold in all markets at the moment. And this is a really good example when it comes to Fiskars. So for example, this picture that we have here about the Norden cooking series, the kind of high-end cooking series, the cooking products are not sold currently at all in the US. Those are only sold mostly in the Nordics and Germany. So that's really a big lever for us going forward. Last summer, we launched a clothing range. That was kind of more of a marketing activity than and it was like a one-time event. And what we wanted to do is to see how kind of well the brand stretches and what kind of a welcoming does it have on the market. And it was really, really good. It was a big success. We gained a lot of publicity in a lot of different really big media globally. So that just shows us that while that might not be the most important channel or category for us to grow going forward, the Fiskars brand is capable of much more than it currently is offering. And that gives us really a lot of confidence in the ability to grow that brand. And it has really been rewarded in design. We had getting a lot of Red Dot awards. For example, the Fiskars product development team was chosen the team of the year in 2020. And previously that award has gone to teams such as Ferrari and Apple. So in really good company here. All right, if we move forward. Another way to build brands and to grow going forward is case movement. So that's kind of a new way to think about how we work. So we don't own the Moomin brands as such, but we have become in this fall a minority shareholder in Rights and Brands, which owns the rights to Moomins, but also a lot of other characters and figures. So just some from the So they have a big portfolio, for example, of Astrid Lindgren characters. Currently, our net sales from these products, there are really not that many products that we sell. It's kind of limited offering from Moomin. We sell about 30 million worth on an annual basis. Now that we have this strategic partnership, that opens up a lot of doors for us to grow this business. So, for example, we can take it to new markets that there hasn't been sold previously. We can also, going forward, have the option to expand the product offering that we have. So we see really a lot of potential to improve this, and this cooperation is a really good new field for us to grow. All right, if we then go forward, as I said, the direct to consumer is important for basically all consumer goods companies nowadays. As such, it's also for us. We really need to win in the channel shift, so we really focus on the direct channel, and that includes both the e-commerce as well as own stores. Obviously, a majority of our sales at the moment comes from partners, so it's not our own direct business. Our own direct business is really significant in the Vita business area, but not in the other ones yet that much. But it's growing in all, and it's more and more important. It's actually for many reasons. First of all, I mean, it's profitable business, but it's also a way to build the brands. And we also gain a lot of data on how consumers behave, what the kind of consumer preferences develop. So in such, it's really important for us to have a connection with the consumers, and therefore we're going to invest more in it going forward. We have grown our store base, not in all markets. In some we have actually reduced it, but for example in China, we are growing the amount of stores quite significantly. Talking about China, if we move to the next slide, China currently is not that big of a market for us. It's a few percentage of our net sales. But as you can see here, it has been growing really rapidly since we made the decision to really focus on China. And we see a lot of potential, so this is just the beginning. It's a market with strong demand. And interestingly enough, while we talk about tableware, you actually often talk about China, because that's kind of where the origins of these products. But then at the same time, branded tableware hasn't been that big of a thing in China in the past. And now that's kind of changing, and we are really in a strong position to benefit from that. We have a super local team, and they have a strong track record, as you can see here. And having a strong local team is really important, especially in China, because the market characteristics are so different from the Western countries, for example, in many ways, and therefore that's really crucial for our success. They have been able to grow quickly, and e-commerce is a main channel, I'd say, with up to 40% of our current net sales coming from e-com. Currently, we are selling mostly Wedgwood, so that's most of the growth here you can see is just from the Wedgwood brand. We have just in this year introduced Royal Copenhagen to the market. We only have a 1 or 2 stores at the moment by Royal Copenhagen. I think the second one is just about to open or has just opened. And all of the other 20 plus stores that we have are basically Wedgwood. So Royal Copenhagen is the next step that we are taking, and then obviously we are also thinking about what other brands we can introduce to the Chinese market going forward. But this is really a big growth opportunity that we have, and we see that over the kind of years, China has the potential to maybe not be the biggest of our markets. That's a far stretch to get close to the US share, but it can still be in our top 3 markets within some years from now. So really seeing a lot of strong growth there also in the going forward. All right, so with all these levers that we have and where we are focusing and see a lot of growth potentials, that also boils down to new financial targets. So if we can switch slides, we introduced new financial targets a month ago in conjunction with the Capital Markets Day. We aim to grow organically by 5% a year. We aim to have a 15% EBIT margins, excluding items affecting comparability, by the end of 2025. Then we have targets for cash flow conversion, so that we are able to invest and we're able to pay dividends. At the same time, we have a balance sheet measure here, net debt to EBITDA, to make sure that we don't, not over levered. And then our 5th target is the dividend, which is unchanged from what it was previously. If you go to the next slide, then to look about our figures. So Fiskars Group has had in recent years challenges, mainly related to top line. So that's why I'm talking so much about net sales growth, because that's what we really need to turn around and get on a track. We have now been growing for 6 quarters in a row, and it's really important for us to keep that momentum strong and growing also going forward. As you can see now, comparing Q1 to Q3 this year to last year, we've been able to grow some 12% now, and that strong growth is something that we, as I said, we want to keep on going forward as well. We're also able to improve gross margin, and that's a really important factor for us to create this 15% EBIT margin. A main driver for that is expected to be an improvement in gross margin. If we then look at how our profitability has developed, on next slide, please. You can see this is comparable EBITDA. So 2019 was a really difficult year for us, but otherwise we've been on an improvement track for quite some time already. And this year that is set to continue. During the first 3 quarters of the year, we made almost as much money as we did in full 2020. And now we expect in our outlook that we reach somewhere between 160 and 170 euros in comparable EBITDA. So that would be quite a big step up from 2020. Also here, we must make sure that our good momentum continues going forward as well. And if we then look at our dividends, next slide, please. Here, you can see we had a long growth of dividends here. We then distributed in for the year 2018 in 2019 a really big share of Wärtsilä shares to our shareholders, and that made us a clean consumer goods company, as we're now gotten rid of all non-core holdings and assets. So now we are a full consumer goods company, and we've been able to get back to the dividend growth. We needed to decrease the share of basic dividends due to the fact that we had previously gained some from Wärtsilä. And now that we gotten rid of that, we didn't get that money from Wärtsilä anymore. But now we're back on the growth track, and as I said, our target is to have a stable, over time increasing dividend, which is paid biannually. This is all for me today, and now I think we have time for some questions.
Yes, so thank you for a really good and interesting presentation, Christian. I have prepared some questions here, and I think one thing that many companies is struggling with today, and something that everyone wants to know more about, is supply shortage and also increased input materials that many companies have been struggling with. So how have Fiskars experienced this, and what is your outlook ahead?
Yeah, that's true. That's a really big theme, and you can't really miss that. What comes to the supply chain, obviously we have not been unaffected by the fact that it's been really difficult at sometimes to get capacity, containers, and all that. However, we've actually not been that significantly affected by it. So we actually been gaining market share from the fact that we have been able to deliver better than many of our competitors. Not all, many others have also been performing well, but it has been really a major factor in a positive way for us that we've been able to mostly provide the product. A few years ago, thinking back, that you say that a competitive advantage was that you actually just were able to ship products. Sounded kind of funny, but actually now that's the case. So we've been able to mitigate that in a really good way. What comes to the price inflation, we are fairly confident with that we are able to get that through to end user prices, so that we are able to pass on the rising costs. For some products and some accounts, there's some lag between, because the inflation has been so rapid, so that we haven't immediately been able to transfer everything on to the prices for end user prices, but that's coming. So we are not. It's more of a timing issue in some extent for some products. For most products, then we are able to get it done already. So we're in a fairly good position what comes to inflation.
That's good to hear. And I also think another question that would be interesting to hear you answer and reflect about is that Fiskars have previously been active in the M&A and also divestment space. And if you look at your balance sheet, it's currently very strong. So what is your outlook on the M&A landscape, and do you have any potential prospects in the pipeline? And let's elaborate a little bit more on that.
Yeah, as you said, we target now a net debt to EBITDA factor of less than 2.5 times, and currently we are something like 0.4 or something like that. So we are really low at the moment, and typically Q4 is a cash flow strong quarter for us. So that might, if we don't look at leasing liabilities, that would actually put us close to zero net debt in financial terms. So that means that we have a lot of room for actions if we decide to do so. The most important thing to understand is that we are open for M&A, absolutely, but our by far most important factor for us to do now is to create organic growth. So that's kind of really a clear number one priority for us. And but we don't want to exclude anything, but because the nature of M&A is that we might have a good case knocking on our door anytime that you can't plan it in advance, and then you just have to be ready to take action once that opportunity arises. So we're not actively trying to get any cases at the moment, but we are not excluding that. So organic growth first and foremost. That's the most important thing. Obviously, we have a set of companies that we are interested in, but obviously we can't disclose what kind of list that is. But yes, there are more and less interesting cases out there.
No, that's understandable, Christian, of course. And let's continue a little bit with the organic growth. And I mean, if you look at your business areas, the Vita business area has obviously performed strong and showed an increased growth. So what has been the main growth driver behind the growth in the Vita segments?
Vita is first and foremost, I mean, it's been somewhat of a turnaround now that we have these programs that are ending, that are designed to improve the performance, in particular of the Vita segment. But that's obviously not that's about profitability, not so much about growth. Vita has been able to grow better now during the pandemic, we had a lot of store closures that had a negative impact. So that kind of rebound from that is positive. Then, for example, the entire China growth story is about Vita at the moment. So everything that positive that goes on there is just about Vita. And we were able to improve our brands, make them much more attractive for consumers. Wedgwood as a good example that we have put in a lot of work in recent years, and that's really paying off now. And the same is now next coming up for Waterford. So just the overall improved performance and our actions are really showing results, and that's kind of the main driver there.
Yes, thank you, Christian. And I think we have time for one more question before we have to wrap it up. So let's finish off with a more long-term or sustainable outlook on the home consumer market. I mean, you have obviously seen some effects from the pandemic as many other companies as well. And what is your current outlook, and how is your feeling about the home consumer market right now? And are there any specific trends that we should keep in mind going forward?
Yeah, what comes to the pandemic, obviously, it's really difficult to see what's going on to happen going forward. There's been a lot of normalization, especially when it comes to the US. So the US saw really strong growth during the pandemic in many of our categories, and that has kind of leveled off already. I think that most people or players in the market have think that kind of the demand has remained at a higher level than it was previously, and I guess that's a lot about people's renewed focus and the want to invest in their homes and gardens and all that. So there's more interest in having or the interest towards these areas is now higher. I wouldn't say structurally that's kind of a strong statement, but at the moment at least it has kept up really well, and so we are really positive on that outlook going forward. Obviously, there's going to be even more normalization once at some point we get more to a freer or pandemic-free world, and people start traveling more. But the kind of drivers are in place, and people are really enjoying their homes. We are also focusing in our strategy really on the US and China, as I said, and here the demographics and also the kind of structural demand drivers are in place, and we are really set to benefit from those going forward.
Yeah. Okay, thank you so much, Christian. Unfortunately, we don't have time for more questions, but thank you for participating today, and thank you everyone who listened into Fiskars. We will continue our day with many more presentations, so thank you.
Thank you.